Hello and welcome to Mortgage Myth Monday. My name is Adam Litzinger, MLS number 472556. I'm a mortgage lender here at Central National Bank, and I'm here to give you the scoop on the myth that once you're pre-qualified, you're guaranteed the mortgage loan. The pre-qualification process can usually be done in 10 to 15 minutes after you give the important information to your loan officer for each person applying for the mortgage. This includes full legal name, social security number, date of birth, current address, gross income, and your authorization to pull credit reports. These items are then reviewed and to determine what loan type and amount you would qualify for, as well as any down payment requirements, if any. Loan officers are trained to review these items and will then use an automated underwriting system to analyze the inputted data to assist in the determination of your pre-qualification. Most real estate agents and sellers will require the pre-qualification letter in order to possibly view the house and or to make an offer. Now that you're pre-qualified, you're able to go look at a home that will best suit you and your family's needs based upon the loan type, purchase amount, payment amount, and down payment if required. You will work closely with your real estate agent to negotiate the details of the transaction to include the purchase price, closing date, and any costs associated with the mortgage, with the contract. During this time, you are encouraged not to make any purchases using credit or open any new credit accounts. As a lender, we have the right to repull your credit at any time prior to closing. If you acquire additional debt during this time, it will cause your pre-qualification to be retracted. Another thing to keep in mind is a job change, especially during the process of a mortgage application, as this can also cause a pre-qualification to be retracted. Now, once you're under contract, you will then contact your loan officer to start the application process and apply for a mortgage loan based upon that contract. We'll then request verification of employment, your assets, income. We're going to be collecting the last 2 years of W-2s, tax returns, pay stubs, and bank statements. After going through the disclosures and signing a stack of paperwork, your lender will instruct you to work on your homeowner's insurance. We, the loan officer, will then order title work and the appraisal on the home. Some lenders do require that you pay for the appraisal up front. This can range from $450 to $750, just depending on the property type and loan. The next few steps is where the real fun begins. The processor will then review all the documentation and verify the originality, and may even reach out to your employer or bank to re-verify items that you have submitted. After everything comes in, all the verifications, the appraisal, title insurance, the homeowner's insurance, it's then going to be assigned to an underwriter. This underwriter will then review every aspect in accordance with the loan type you have applied for. They will make sure there are no issues with the title of the property that would prevent the seller or sellers from selling the property to you, as well as the bank will have a first lien position. There will be a title company that will issue this title insurance commitment to you to ensure you receive clear title to the property. The underwriter will then review the homeowner's insurance to make sure you have adequate coverage and the deductibles are within guidelines. The appraisal will then be reviewed thoroughly to make sure the property is considered marketable and that the appraiser was able to determine a value consistent with other properties that have recently sold or are currently listed for sale in the immediate neighborhood. These properties are used in the appraisal and are going to have similar characteristics to the property that you are buying. If everything checks out and is in line with the loan and the bank guidelines, then the underwriter will issue a loan commitment guaranteeing you the loan based on information in file. There may be additional requirements listed on the loan commitment that needs to be completed prior to going to the closing table. Again, sign another stack of paperwork. The title company will then finalize the transaction, record the mortgage, pay off any liens, pay all the bills associated with the transaction, and disperse funds accordingly. Usually after 30 or 60 days, you will then receive a copy of the deed as well as the title commitment in your name stating the property is now yours, obviously subject to said mortgage from your lender. As you can see, there's a ton of working parts from the time you initiated pre-qualification to the day of closing. Please understand that there are many rules and regulation that lenders have to abide by in order to do a mortgage loan. Not all mortgage loans are the same and may require additional verifications, inspections, or any other requirements. This is why I say it's a myth that once you are pre-qualified, you're guaranteed a mortgage loan. I want to say thank you again for visiting and taking your time, and I hope that I've given you more information on what is done behind the scenes. If you feel you would like more information, please do not hesitate to contact your local lender at Central National Bank or visit us online at centralnational.com/mortgages.